Hello and welcome. This is Kathleen Lozito, and I'll be your host for today's webinar entitled, Does My Credit Score Impact My Interest Rate? Joining me today is Dale Poe, Military Mortgage Advisor for AAFMAA Mortgage Services. If you have any questions during the presentation, please enter them into the question block on your screen, and we'll do a question and answer series after the presentation. This monthly webinar series is brought to you by AAFMAA Mortgage Services, LLC. We are a wholly owned subsidiary of AAFMAA, offering a full spectrum of mortgage products to the military community. Currently, we conduct business in Alabama, Arkansas, Colorado, Connecticut, Delaware, Florida, Idaho, Indiana, Iowa, Kansas, Kentucky, Louisiana, Maine, Maryland, Michigan, Nebraska, North Carolina, Oklahoma, Oregon, Rhode Island, Pennsylvania, Tennessee, and Virginia, and we continue to open offices in states across the country. The AAFMAA Mortgage Services team consists of state licensed loan officers. Among all of our professionals, we have decades of both military and industry experience. We're an equal housing opportunity lender, and for your record, our NMLS is 1423968. As a wholly owned subsidiary of AAFMAA, we operate with the same values and priorities of our parent company. AAFMAA stands for American Armed Forces Mutual Aid Association, and is a longest-standing not-for-profit association that empowers military families with affordable financial solutions. It accomplishes this by being the premier provider of financial planning, investment management, and trust services for the military, not-for-profit. This presentation is educational. It's for general information only. It's not specific investment, legal, or tax advice for any of you individually. Do not rely on this presentation alone to guide your home purchase decisions. Since each individual situation is unique, the type of loan that benefits you the most will not necessarily be the same as another current or former service member. For individual advice, please contact us directly. We produce this webinar series in-house with our own professional staff as a service to our members and help them better understand the resources available to them. Now, without further ado, I will turn it over to Dale to go over the agenda.
Hello, my name is Dale Poe. Our agenda today is going to be over 5 subjects here. What is a credit score? 5 factors that affect your credit score. Mortgage credit score examples, the mortgage calculator, and how to improve your credit score. Many lenders use the FICO credit score, which is the Fair Isaac credit score system. The credit scores ranges from 300 to 850 to gauge your credit worthiness. The higher your score, the better track record you have in paying your debt. Payment history. The biggest indicator where someone who pays their bills on time is their payment history. The best credit scores tend to have a long history of on-time payments. Missed payments, debt collection accounts, judgments, payment delinquencies will affect your FICO score negatively. However, they do not stay permanently. Bad marks will stay on your report for 7 years plus 180 days. The important thing to take out of this is always pay your bills on time. Amount owed. Simply put, this is based on the amount of your total outstanding debt. But owing money doesn't necessarily mean that you're a high risk to a borrower. Perhaps the most complex category of this whole system is determining. Your utilization is based on most recent reports from financial institutions. Most banks and credit unions report monthly statements to the credit bureaus. Your score is based on your most recent statement balances. Length of credit history. In general, the longer the credit history will increase your credit score. All accounts, open or closed, will contribute to your average age of accounts. Closed accounts will stay on your average age of accounts for 10 years. Mixed types of credit in use. Your score here will consider your mixed use of various accounts, including credit cards, retail accounts, mortgage loans, auto loans, installment loans, finance company accounts, and elective. A healthy combination of all accounts will increase your score slightly here. However, it is not necessary to open new accounts if you don't intend to use them. It is never a good idea to open a credit account if you do not intend to use it. New credit. New credit research shows that opening multiple credit accounts in a short period of time present a greater risk to borrowers. There's two types of inquiries that will affect this score. Hard inquiries, or resulted in when you apply for credit that is extended to you. A soft inquiry is when a company's run your credit report without the intent to extend credit to you. You are given a period of about 45 days to shop around for best mortgage rates. You can shop for mortgage rates that will not hurt your credit score as long as it's all within a 14-day window. Multiple credit checks from mortgage lenders that are recorded on your credit report as a single inquiry. This is because other creditors realize that you're shopping to buy a home. You can shop around to get multiple pre-approvals and official loan estimates. The impact on your credit is the same, no matter how many lenders you consult, as long as it's all in a 45-day window from the first credit check. Even if a lender needs to check your credit after the 45-day window is over, shopping is usually still worth it. The impact of additional inquiry outside the 45-day window is small. While shopping around for the best deal can always save you a lot more money in the long run. Note, the 45-day credit applies only to credit checks from mortgage lenders or brokers' credit cards, processed separately. Just a few points on one way or another can affect your ability to get a loan with the interest rate that's being offered. Say you want to finance a $250,000 home with a 30-year fixed rate loan and plan to put 20% down, $50,000, with an interest rate of 4%. Your estimated monthly mortgage payment, excluding property taxes and homeowners insurance, would be $1,194. You will pay $179,674 in interest over the life of that loan. Using the same parameters with an interest rate of 4.5%, your mortgage payment would rise to $1,267, and you will pay $206,017 in interest over the life of the loan. At 5%, your monthly payment goes up to $1,342, and you will pay $233,139 in interest over the life of the loan now. An easy way to see how the interest rates might change your credit is to use the mortgage calculator on our website. Be sure to check on the screen and visit a mortgage calculator on AAFMAA.com or speak to one of the mortgage military advisors here at AAFMAA to understand your different options. Improving your credit score. If you don't have a credit history in your accounts that are inactive, open a loan with a local credit union. The effect a borrower takes on the loan and pays back is those payments are tracked by the credit bureaus. After several months of on-time payments, the member's score will start to rise. Credit utilization, which is the amount of your credit balance as compared to your credit limits. A good rule of thumb is to keep your credit utilization under 30% of all your credit cards and credit lines. Understand the interest rates and terms on credit cards so they can bet on the best rates possible, even asking company to match competitor offers. Everybody's plan is custom made for their needs. The bottom line is that you're willing to do the work that can improve your credit score that gives you a better interest rate.
Thank you, Dale. That was a great presentation. So we had a few questions come in, so how about we get to a couple of those now? All right.
Sure, I'd be glad to answer them.
Great. The first question I'm seeing is, do I need great credit to get a mortgage?
No, you don't. Here at AAFMAA, we can help anybody with a 580 credit score and higher.
Great. All right, here's another one. What should be the first step to repair my credit?
I would say the first and biggest step to do to repair your credit is order a credit report from the credit bureaus and look over it and make sure there's no mistakes or anything that's in question. From there, you can simply, if there's something that you don't think is not right, they will tell you what you would need to get it fixed.
All right, sounds good. How long does it normally take to build up my credit?
The answer would not be the same for any two people. I've seen people that were able to build up their credit and fix things in 30 days. And some people would take, 3 months or 6 months. It really depends on how much you need to build your credit up to. For a lot of people, sometimes they might only need 10 more credit points or so to get to where they need to be on the credit score. So really, the first step is knowing that is where your credit is now.
Okay, perfect. So the last question we have time for today is, does my credit directly reflect my interest rate, or are there other factors involved?
Yes and yes. Your credit score does affect your interest rate no matter what type of loan you do, whether it's a VA loan, a conventional loan. No matter what type of loan it is, your interest rate is the number one indicator. But there is several other factors involved. One being, what type of house are you planning on buying? A single family, a condo, an investment. Also the loan size. And what I mean by loan size, whether it's $100,000, $400,000, $800,000. Those are all great indicators of what your interest rate will be also.
Great, thank you, Dale. That was really informative. So if you have any more questions throughout the presentation, if you watch it over, if you think of something later, feel free to reach out to Mortgage Services directly at mortgage@afma.com, or you can go ahead and reach out to Dale directly through the contact information on the screen, and his email address is rpo@afma.com. We'll go ahead and break here for now, but you can reach us whenever you need to. Please don't hesitate to ask for help. We do this every day for our military community, and it is our pleasure. This weekend, you'll receive a follow-up email with instructions on how to access a recording of this presentation, and you can always register for future webinars and review past webinars at afma.com/webinars. If you found this information useful, we encourage you to please share it with your friends and family. Our membership grows stronger every year because you introduce those in your military community to AAFMAA. Thank you again to everyone listening and for joining us today. We look forward to our next opportunity to assist you.